Welcome to the AgriHive Business Summit series. We hope Ben Thomas will give some real insights to make tactical and strategic decisions for your business. The value is in planning around this information. Share this video and join a new wave of resilient businesses as they grow with www.agrihive.com. Have a great day.
To set the scene, or I guess to lay the foundation for the discussions from the start, you're going to hear the outlook for both the meat and wool industries. Ben Thomas is our first speaker. Ben Thomas has been a senior market analyst for Meat and Livestock Australia since 2012. He has a Bachelor of Rural Sciences, but he's also been through the School of Hard Knocks in the cattle industry, working as a cadet with Twynham Agricultural Group that runs currently about 8,500 Angus breeders in New South Wales. In order to get an understanding of the North American beef industry, he worked for a couple of years on a Canadian cattle property as well. He sifts through the figures and the projections daily, so for the next 15 minutes he's going to tell you about what is likely to happen next year in the beef market. So please welcome to the stage Mr. Ben Thomas from Meat and Livestock Australia.
So I've only been given 15 minutes, and I want to keep it pretty short and sharp and to the point. So my simple message for today that I'm going to go through with you is that Australian beef supplies next year and into 2016 are going to tighten. The demand for Aussie beef is likely to remain quite strong, and so therefore cattle prices or farm gate prices should improve. And I'll go through my reasons with you over the next 15 minutes or so. It's a bit difficult to give a presentation though without talking about the forecast and the future outlook, without looking where we currently sit at the moment. And as you can see by this rainfall map, this rainfall decile map behind me, for the past 2 years the majority of the eastern states has had, if not below average rainfall, very much below average rainfall. And of course that's put a heck of a lot of pressure on the cattle markets. We've filled our slaughterhouses, there's huge congestion at the abattoirs, and the restocker interest is virtually redundant. So for the past 2 years there's been a heck of a lot of pressure on cattle prices. When we look at slaughter, we're going to kill 8 million head of cattle for the second year in a row. And I can tell you the last time where we had 2 successive years of cattle slaughter over 8 million head was way back in the mid-1970s, way back in the beef slump. So we're in an incredibly unusual time in that slaughter is absolutely through the roof. Next year, as you can see, we're likely that it's, provided there's, we return to normal seasonal conditions, we're going to see a decline in slaughter and it'll slowly pick up out to 2020. But when we look at the adult cattle slaughter and see what's making it up, the female proportion has gradually been creeping higher and higher and higher. So if you look at the yellow line, that's the long-term female cattle, female slaughter average as a percentage of the overall. It peaks in March at about 49% before tapering off down to around 42% towards the back end of the year. Around March last year, which is, the orange line is 2013, and around March last year is when a lot of producers realised that they couldn't really hold on to any more of their breeding stock, a little bit like the Kidworth case study that we'll be looking at later on today. And the proportion of females making up the adult cattle kill gradually crept higher and higher and higher. And if you look at 2014, the blue line, females have accounted for over 50% of the national kill, which is absolutely through the roof. So we think about that, that's a heck of a lot of females that have been taken out of the system. If you factor in on top of that the lower branding rates, especially across Northern Australia, we're going to see significantly fewer calves coming through the system, not only next year but into 2016 as well. Throw into the mixed live exports. We're on track to send 1 million head of cattle overseas live this year, and we're forecast to do the same thing again next year as well. You know, Indonesia, we're on track to send 750,000 head over to Indonesia, 130,000 head over to Vietnam. I mean, they're a market that, you know, only 2 years ago we virtually sent nothing. We're going to send 130,000 head over there this year, and then on top of that you've got the likes of China, you've got the likes of Israel, a number of other markets that are likely to continue demanding high numbers of Australian live cattle. So when we pull all of this together, the high adult cattle slaughter, the high female slaughter and significantly fewer calves coming through the system, the high live cattle exports, the Aussie cattle herd has dropped 2.6 million head in just 12 months. And it's likely to continue easing next year to around, 26.1 million head. And if we don't get a good break in the north, it's likely it'll continue to dip into a figure with a 25 at the start. So we've gone from having what was the highest cattle herd in 3 decades last year. The highest cattle herd in 3 decades to what will be the lowest cattle herd in 2 decades. So I hope I've made my point clear that, and before I go on, as we all know, it's quite a slow, naturally it's quite a slow rebuilding.
G'day, how you going?
How you going, mate?
G'day, mate. Sorry about this. I've lost my saddle here. Has anyone got? Someone said they're going to drop the saddle off in the hall and in the theatre. I'm just not sure where.
What have you got here, mate?
I'll let you do. I don't want to hold you up. You look busy in here. Okay. Mate, can you just hold that for me? I don't want to. Just hold that there. I'm Lockie anyway. What's your name?
Ben.
Ben. Anyway. I'll just get out of your throat. I'll just. Sorry about this. I'll just quickly start him up and I'll get going. I've got some work to do actually. So I'll quickly get settled. Hang on. All right. Hang on, what's going on? This is this horse. Hang on. We've got to get, listen, can you just come here, mate? Just maybe hold this hold that. Yeah, hold that on there, just in case. Just hold his head. Hang on. Look out, mate. No. Listen, I'm really sorry about it. Look out, no, come on. Now look what you've done. Look what you've done.
Hey Ben, maybe we should line next one.
Maybe you can yeah. Give me a hand to get him up or something. Can you if you can just... Here we go, I'm really sorry about this, mate. What are we going to do? Maybe we've got some help or something. Yeah, we're going to...
This bloke in the front here, got that.
We can just go... No. Nice biggies anyway. All right, we'll get out of your road. Sorry about that. Oh, but better I'll start this up.
Yeah, you're right, mate. I think that's my 15 minutes, isn't it? Where were we? Big cattle herd, now a low cattle herd. So supplies are going to tighten a fair bit over the next few years, and it's unlikely, by the time we hit 2020, it's unlikely that the cattle herd will get back up to anywhere near where we were last year at above 29 million head. Moving on from the supply side of things and onto the demand, and just looking at the export markets, and I don't really have the time to go into the intricate details of all of our export markets, but looking at it on a whole, and we export 70% of the beef we produce, so the overwhelming majority goes overseas. And as you can see, 2012 was in fact a record year in volume terms. 2013 was also a record year in volume terms, and yes, the high cattle slaughter is a large reason behind the high volumes that we're exporting overseas. And for 2014, we're on track to at least get level with the record volume that we sent last year. So we're sending a heck of a lot of product overseas, and while cattle prices are reasonably low here at the moment, the product that we're exporting isn't. if we take 90CL or manufacturing beef prices as a proxy to the US, they're at all-time highs. They're at absolute record highs. Look at another market that we're sending large volumes to now, China. The retail meat prices in China are, the highest they've ever been. So the product that we're sending overseas is not cheap. It's quite high priced, and all the indicators sort of suggest that the prices are likely to remain high, or at least remain firm over the coming years. So I suppose that brings me to cattle prices themselves. And over the long term, Australia and the US have had a fairly close relationship, with prices. And this chart only goes to 1998, something like that. But if you take it all the way back to the 70s, it shows that similar relationship. But anyhow, up until 2011, you can see that US cattle prices have just started, leaping ahead of where Australia is. And I suppose if you were to compare the two situations, in Australia we've had this terrible drought for 2 years, and our cattle slaughter has been through the roof. I kind of look at the US as almost being a couple of years ahead of where we are, in that their cattle herd is now the lowest it's been in 60 years. The number of calves that they've got coming through the system is significantly lower. So the feedlots are screaming out for cattle, and the price of feeders is quite high. The price of breeding females is also quite high because it's such a depleted herd, or so low in comparison to where it has been in previous years. So if you look at the US, and they're not even completely out of drought yet, there's still a lot of areas that are, in Texas and various other parts of the country that are entering their 4th year of drought. So, even though the drought's not over, cattle prices are still quite high because of that depleted pool of breeders and calves coming through the system. So I suppose if you to look at the Australian cattle herd, we know that there's going to be a heck of a lot less breeders coming through the system next year, and calves coming through the system. So I suppose that the current US situation paints some picture, or shows some potential for where, or the trends for where Australian cattle prices could be next year. So I just want to finish. Again, I wanted to keep it nice and short and sharp and within time, and I think I have, even with a horse visiting. I just wanted to repeat my, I suppose, first message, and that is that, Australian beef supplies are going to tighten next year. There's no doubt about that. The demand is likely to remain quite strong. We're exporting those quite high volumes at quite high prices. And so for that reason, once we do get a widespread break, and once that congestion at abattoirs eases, we should see some benefit at the farm gate. The final thing that I want to show you is the MLA Market Information app. I'm sure most people that have a smartphone of some sort. This is a new app that we released about 2 or 3 months ago. It's free from the App Store, so I encourage everyone to download it. There's quite a few things on there. There's news reports and all the daily indicators and all those sorts of things. So I encourage everyone to download it. I think I've got a minute for questions. If anyone has anything they'd like to fire away. Otherwise, I'm going to be here for the whole time over the next 2 days, so happy to talk to everyone then. Yep.
Without the benefit of graphs, just a 30-second update on the sheep meat market, where that's heading.
Sheep meat market, yeah, it's looking fantastic at the moment. It has come back off the boil a little bit. I suppose the big advantage of the sheep meat game is that our really one and only competitor is New Zealand, and their lamb supplies are down quite low at the moment, historically speaking. So with the far better pasture conditions in the south as well, the lamb job is looking good and is likely to remain pretty good for at least the coming year and into next year as well.